we'll move into delayed financing. So this is also available on many conventional loans. So what is delayed financing? Buyers can pay cash to win bids, and then they get that money back through delayed financing. I touched on this before. It's a win-win for everybody involved. They get the house, realtors get the sale that otherwise might not have happened, and then the originator can turn around and get a loan that just they would not have gotten otherwise because it was a cash purchase. So it's good for us in the sales world. It's good for our borrowers. It's a good tool for our buyers and sellers to be able to use. So here's how it works. The challenge is the borrower finds the right home or investment property. They're ready to make that purchase, but since the market's still very competitive, low inventory, people moving, people getting there fast, they need to move quickly. So making an all cash offer can a lot of times be a lot more attractive to a seller. You guys know this because there's no appraisal, there's no underwriting, there's nothing. You just let me check out the place. A couple days later, here's your money. We're all done. They want as much of that cash back as soon as possible after the sale. So if they buy a home for $1 million, they want to be able to get back the majority of that $1 million, right? So all of these fringe non-QM products can work on delayed financing, but so can conventional. So if somebody's cash heavy, they might be able to buy that $1 million property, turn around and then refinance 80% of that and put that 80% back in their bank. So now they're paying interest on it. They've got a loan, but at least the loan was done on their timeline versus being done on the seller timeline while under contract. So that might make sense for a lot of people. This was very, very popular. What were we, about 18 to 2 years ago, when properties were just gone before you even put it in the MLS or before you even launched it, multiple offers. And you guys remember that. That's when this was very popular. There is some stipulations here. So basically on the 80% cash out option, the current market value is irrelevant. We have to go by the purchase price of the home. So if they bought it for $1 million and a new appraisal tomorrow says it's worth 1.5, that doesn't matter. It has to be done at the $1 million purchase price until 6 months passes, and then we could use the new appraised value. So there's a little catch-22 there. That's not always the case, but it's still a good tool to put that money back in your bank when you need it.